Good morning. My name is Ricardo Meléndez-Ortiz. I'm a senior strategic advisor at Latin Trade, and I would like to extend a warm welcome to all of you attending today's and this week's webcasts on the outlook for Latin America in 2021. 2020 has been characterized by black rhinos, by black swans, and ensuing uncertainty. And although we're not yet on clear skies, some changes in key drivers, such as outcome of the US election and the confirmation of a vaccine and therapeutics to deal with the pandemic, should allow us to enter 2021 on some firmer ground. On this first session, we invite you to explore what next year looks like to some prominent industries in the Latin American region. At Latin Trade, we believe that macroeconomic information, to a degree, is a commodity. Anyone can easily find Bolivia's growth rate on a cell phone today. This is not to say that knowing the size of the fiscal deficit or expected inflation rate is not important. Macroeconomic and sovereign risk analysis is no doubt the staple for business forecasting, but oftentimes it does not convey the shades of gray, the shadows, and the brightest spots that sectoral and firm-level analysis provides. In fact, and this is a somewhat coarse observation, companies do not compete against GDP, but against concrete groups of real-life peers. Corporate liquidity, leverage, mergers and acquisitions, changing regulations are also relevant elements that investors and people in business have to deal with to predict future performance. Credit ratings are relevant not only as a guide for investors on where to put their money safely, but as a determinant of the cost of capital to individual firms. So to help us try to understand what we have in mind and the rating companies have in mind, we have invited a set of brilliant seasoned analysts. Today with us, we have Lucas Aristizábal with Fitch Ratings, Director of Latin America Corporate Ratings, Marcos Schmidt, Vice President, Senior Credit Officer of Corporate Finance Group at Moody's Latin America, Diego Ocampo, Senior Director and Sector Lead Corporate Ratings Latin America at Standards & Poor's, and Rina Quijada, Vice President of Business Development Latin America at IHS Markit. We're asking each of them to focus on a specific industry or sector. Marcos and Diego will have it particularly hard since we're asking them to give their opinion on such disparate industries as tourism and manufacturing or agribusiness and technology. But with their vast experience, they'll do a great job. A housekeeping remark: we will have a short questions and answers session at the end of the presentations. I'll kindly ask that those of you viewing this webcast on the Zoom platform, please place your questions at any time on the Q&A tab of your screen. Stating who the question is addressed to specifically should get us help through them more efficiently. So to begin our conversation, I would like to now invite each panelist to offer some brief initial remarks. Then we will take it from there with the specific questions. So let's listen to them and welcome again. Lucas.
Thank you. Thank you, Ricardo. And welcome everyone to this panel. So I'm going to talk about the oil and gas market in Latin America and what we expect for 2021. I think it's needless to say that we expect an improving trend in 2021 after a very challenging 2020, to say the least, for Latin American oil and gas companies. And this is primarily as a result of the expectation of price recovery in oil and gas next year. So we expect, and this is an assumption for oil and gas prices, for oil prices for 2021 is that they'll increase by approximately 10% from the expected average in 2020. This, even though it's an improvement, this expected price is still 30% below the price we saw in 2019. So it's going to take a couple of years for oil and gas companies in the region to go back to where they were in 2019. We expect that oil and gas companies starting next year will restart their deleveraging trend. as oil prices improve. Oil and gas companies in aggregate over the past, let's say, 3 to 5 years, have been improving their capital structures, and we've seen the deleveraging trajectory leading to 2020, which was very positive for some of these companies to be able to weather the downturn in the oil and gas industry. In 2020, needless to say again, lots of this went backwards. We expect the leverage to peak for all of the oil and gas companies in the region. Several of these companies had to access the debt capital markets or the lines of credit to borrow money in 2020 in order to preserve liquidity. So as a result of this, leverage is going up. But as prices are somewhat stabilizing, companies are feeling more comfortable with the liquidity position, so much that some companies have, for example, like Ecopetrol, after cutting severely its CapEx program, is now starting to revamp its CapEx program. Companies like Petrobras, who access lots of, or almost all of its credit lines in 2020 at the beginning of the pandemic, now it's repaid all of its lines of credit and starting to think about dividend policies and how they're going to continue that deleveraging trend going forward. So to recap, in the oil and gas industry, 2021 will be an improving year, but is nowhere near what we were in 2019, and it's going to take many years for companies to go back to where they were in terms of credit quality like they were in 2019.
Very well. Marcos?
Hi, good morning. For the tourism industry, I think the one of the weakest links during the pandemic was the airline sector. Companies were hardly hit since the beginning of the pandemic, and the recovery also will take many years for companies to get to the same level as where they were back and at the end of 2019. We have seen companies more focused on the international markets doing even worse, and that was, for example, the case of LATAM Airlines and Aeromexico that ended up filing for Chapter 11. We have seen since the virus outbreak, companies cutting costs, companies reaching deals with their employees to increase efficiencies and preserve liquidity. But when we compare the region, the Latin American region, with Europe and the US, companies did not get the same kind of support that was extended by those governments. So I guess this is why some of them actually ended up filing for Chapter 11 when companies in Europe and US still have like more lifeline if the pandemic endures. But if we speak a little bit about numbers in terms of demand, we expect still for Latin America that the demand for travel will be about 50% for the entire year of 2020 of what it was in 2019. And then to increase to 80% in 21, and then to reach the same kind of level just in 2023. So in a nutshell, a hard hit sector that got very little support from the government, and with a few differences depending on the concentration, if domestic or international. Domestic companies are still doing better, and demand is increasing faster than the companies more focused in international business.
Diego?
Yeah. Thank you. You want me to give a brief opener or just speak on the two sectors that I was glad to have agribusiness and technology instead of travel and tourism. as opposed to markets. But do you want me an introduction in general of the corporates or just these two sectors?
No, I think it would be good if you focus on the sectors and maybe say
Correct.
something generally on corporate.
Yeah, I said I was glad because in general these two sectors did fairly reasonable, and actually we have expectations that next year is going to be something positive for them. It's a little bit encompassing the agribusiness. Agribusiness to us means basically three subsectors. The first one is protein names in Brazil, with I would say pretty decent dynamics. Actually, I was looking at the amount of rating actions we had since the early March, I would say, when the pandemic started. We had 94 rating actions, and most of them, I would say, probably 88 were downgrades. The rest were upgrades. In protein was the sector that concentrated the most. That speaks on itself. How good this year has been. And the other sector that we looked at is forest in agribusiness. That is essentially pulp and paper in Chile and Brazil. It is a sector that was struggling with a price, I would say, weak price environment in 19, coming out of a very strong year in 18 in terms of prices. But then potentially, I would say, lack of discipline or some turmoil on the supply side. I believe it was after the merge between Suzano and Fibria and probably some other capacity additions announcements. The price environment got weak in 19, and we were expecting a nice recovery, at least in the second half this year. That didn't happen, obviously. Or I would say it is happening way slower than we expected before, or we anticipated. Most of that due to COVID and weaker demand from Asia. But we expect 21 and a recovery coming in probably in the fourth quarter this year. And then sugarcane is the other subsector, meaningful subsector that we rate in the agribusiness space. That is essentially sugar and ethanol in Brazil. And due to the mobility restrictions that were at the onset of the COVID pandemic, both the oil price crisis, it was hit both ways in that particular segment. But the sugar performance quite a little bit offset that. I would say the sugar and the depreciation of the real. So companies switch, the ones that are more flexible, obviously, were able to fix and to switch into more sugar. So exports basically soared, and we do expect a very good 2020 and 21, at least the rest of the season 2020 that ends in April next year, and the season after that, because they have hedged most of the sugar being produced at very attractive prices. I think that's pretty much for the agri, and then the technology. We're not that experts. We rate just I would say companies that have a pretty decent technological arm, but not pure technology companies. And the type of entities that we look at is basically retailers that have online commerce and platforms, and those online transaction type of businesses, such as the Falabelas or Magazine Luiza. We also rate consumers companies with a strong food in technology, just like Natura, for instance. I think it's a sector or subsector that has been a winner in this year. And if there was a disruption going in, it made, I mean, this year has made shoppers and the whole, basically, society to embrace online consumption and those type of things right at the onset. Just for give you a reference point, Falabella's online sales are about 40% of the retail sales. It wasn't nowhere near 2 years ago, and the pace is changing fast. So I'll leave it there and keep silent for questions.
Perfect. Thank you, Diego. That's very comprehensive, and we'll get back to some specifics. Rina, can we hear from you?
Good morning, everybody. And on behalf of IHS Markit, thank you for the invitation to share our insight with you guys. And Diego, thank you for the introduction, because your last comments work very well into what I'm going to be talking about. I want to share one slide with you. So I normally use this slide in many presentations, but today it's even more important, because what we see here happening because of COVID, because of the significant deterioration of economies throughout the world, we just revised our GDP forecast and estimates for 2020. And the only country that we show, a major country with positive low single digit growth is China, basically. The rest, US minus 4%, the world minus 5%, Brazil, Latin America. I mean, there is not one country with a positive growth rate. And petrochemicals, even though it's capital intensive and very complicated technologies, at the end of the day, the end product is used by people like you and like me. So today we see that interaction between natural resources, all the refined products, base chemicals, commodities, and formulated products going into these products that, you know, we take for granted. Pharmaceuticals, personal care, you know, textiles, electronics. And one of the side effects of the pandemic is going back to a better image of the industry and the benefits of petrochemicals, plastics in our enabling our day-to-day living to be easier. So we let me stop sharing now and go back to the screen. So I wanted to share with you a few things that I think are critical to 2021. And like I said, China, the only country with a positive GDP growth rate and recovering sooner than anticipated. Therefore, demand was better than anticipated. If you listen to demand contraction in many of the industries that my colleagues Diego, Marcos, and Lucas talked about, especially oil and jet fuel and tourism and so forth, these industries were very, very affected by COVID and low crude oil prices and so forth. The petrochemical industry was not as affected because a large portion of petrochemicals go into non-durables. And non-durables really continued to grow and even grew faster than anticipated because of the single-use plastics that were prohibited, banned in some locations. You know, you couldn't go to a grocery store and ask for a plastic bag. That was a bad word. Today, they actually will not allow you to take reusable bags. They will give you that plastic bag again. So PPE is done with the non-woven polypropylene. All the what's coming in 2021, the distribution of the vaccine with these mega, you know, numbers that we supposed to be distributing in early 2021 will have attached a large volume of petrochemicals as packaging. You know, Diego and others talked about the online purchasing. As you buy online, you use more cardboard paper and also plastic packaging. With the coronavirus, the other unexpected side effect is like everything is packaged individually. So before you can go, you know, share a box of chocolate with someone. Now every chocolate has to be individually wrapped because of the COVID. So all these little side effects had a positive impact on demand. Therefore, if you're in the market for polypropylene or PVC or polyethylene, you'll find it very expensive and very limited. Adding to all the demand growth and the decline in investment and so forth, we had a very busy hurricane season in the Gulf Coast where 80% of the industry is located. So many unexpected downturn, which narrowed the supply. So that's pretty much in a big picture what happened this year. What do we see happening next year? So uncertainty will be key, right? So we have so many different variables that are beyond our control that will impact our business. So uncertainty, I think, will continue to affect the visibility for 2021. However, we should, in these time of uncertain demand, supply, trends, go back to the fundamentals. So market fundamentals are there, they don't change. We need to be very, disregard the noise and go back to the fundamentals, 1. 2, you have to continuously update information. I can't tell you how many times we have updated our supply and demand balances, our crude forecast. I mean, this year has been so busy because initially in March, we thought, Brazil GDP would be -7. Today, good news, because of the government incentive and so forth, the economy reacted and it's going to be better than anticipated. And the third one is agility. We have to be able to adapt and adjust. And of course, the oil and petrochemical industries are very large and sometimes slow to react. So we need to do that. I'll leave some takeaways here for what to expect in 2021. Despite everything I told you about plastics having a better image and people accepting it, blah, 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 we think the industry, the key players, Dow, BASF, INEOS, Solvay, all the critical Braskem, every company is committed to continue to manage waste, because the problem is not plastic, it's how do you manage and dispose correctly the waste you produce with plastic. So companies continue to pour money into that. That is an opportunity, that is a growing area. And we see this growing, and the commitment of the industry every day becoming more and more visible with ESG, with the index and the markets. Everyone wants to be into that social license to operate. The energy transition, here's a critical, if you forget everything I said, this is the critical point. 2020 will be remembered as the year where energy transition pivot. And you can write that down. I mean, that is so critical. your non-carbon energy transition. This year, fossil fuel demand declined, while renewables are growing double digits. So that's your opportunity for investments. So energy transition, we believe 2020 is a pivot year, pivot point. It's important. From that, you can, we can spend 3 hours talking about what that means. And the other last thing I'd like to leave you with is the region. Latin America will continue to be a strategic market for producers in Europe, in USA, in the Middle East, and in Asia, because for the last 20 years, investments in producing the necessary petrochemicals in the region to supply this demand has not happened. So the region as a whole, from Mexico to Patagonia, continues to be a net importer of many of these commodities. With that, I close, and we can happy to continue the conversation and answer any questions. Thank you.
Thank you, Rina. Again, we wish we had the 3 hours to go into details, because this is fascinating, and I'm hesitating how to move forward, but let me maybe take a cue from what you just said at the very end, and go back to Lucas and ask him about the question of the transition to a low carbon economy, how much impetus we're going to see into this agenda coming from a new Biden administration, and how he sees this affecting investments in oil and gas in the region. Also, if you want to take the opportunity at this time to just talk more broadly about what are the things, regulatory or otherwise, you see paving the way for these new investments in oil and gas in the region. Lucas.
Sure. The important thing to consider with the energy transition is that it's not going to be an overnight switch from the traditional oil-driven energy markets to renewable overnight. This is something that is going to take many years, and many years is decades. So it's going to be. I don't know if we share the view that oil demand is peaking in 2020. Maybe over the next 5 to 10 years, we're going to see very anemic demand growth for oil as energy transition goes through over the next few years. There is going to be a growth in electrification of the energy market over the next decades, where we are expected to increase or potentially double our per capita consumption globally of electricity. And that growth is going to be supplied primarily with non-conventional renewables, solar and wind. And from a regulatory point of view, it's starting to lose a little bit. Regulation within this energy transition framework is losing some relevance, it's losing some importance because of the increasing competitiveness from the non-conventional renewables. So they no longer depend on regulation helping them out to make them competitive. Now they're starting to be competitive on their own, which then therefore takes regulatory aspect out of the equation. And I think we've seen that in the US to some extent, where the US backing away from the Paris Agreement somewhat didn't have that big of an impact for energy transition and decarbonization of the energy matrix in the state. That happened naturally because of the increasing competitiveness of gas. So going forward, we're going to see potentially the combination of renewables, especially photovoltaic, solar, combined with batteries. So you're going to see the increasing competitiveness of this combined technology, making a very big impact on the electricity industry, because it's going to flatten that famous duck curve where you have change in demand and supply for the high during the high periods of sun. Now you're going to be able to store that energy and flatten that curve and take away the peaking units, and that's going to have a fundamental shift in the energy industry altogether. So to recap, maybe the next 10 years is going to be modest demand growth for oil and gas. We do expect it to recover going forward a little bit from the very low demand or the demand decrease in 2020, but nonetheless, increase in demand is for sure starting in 2021. But for the next few years to see an energy transition and for renewables, non-conventional renewables to gain significant market share from a relatively low. I mean, we've seen Rina mentioned an increase in renewables, but still from a modest percentage as a whole of the energy generation matrix globally today.
Thank you, Lucas. Again, I think just to keep some logic into this discussion, maybe we come back to Diego on some of these same issues, meaning all these drive into environmental, social, corporate governance considerations, double with the possibility of a second wave of COVID hitting the region. How do you see agribusiness and technology sectors faring in that scenario, in that context?
Yeah, I think obviously we can't discard the second wave. And as we look at the Northern Hemisphere, we see cases going up again. And this is pretty much probably what is coming next to our region, hopefully. It does happen more mildly and at the same time as vaccination spreads. But we think if a second wave hits our shores, it won't be as damaging as the first one. I think because vaccination is more close to be a reality, because there are protocols in place and people is more, and governments are more ready to deal with this. And also the medical systems are better prepared, I would say. But that's of course assuming the virus doesn't mute into a more meaner form, right? So in that context, and this is very short term, but perhaps it's not much only on the potential second wave of COVID. I think these sectors and subsectors are well prepared to deal with this, especially the technology sector. We've seen, for instance, the price of the Mercado Libre shares doubling this year. I think there is room there to more growth and even under a more potentially complex competitive scenario. But I think it's going to be the technology sector is going to be a sector with meaningful growth and opportunities in years to come, both from organic growth, meaning shoppers that embrace that new channel, and also but non-organic growth, basically more categories switching to the online market. I would say the other three subsectors of the agri are probably going to be deal fine with this. Basically, for the first, because we don't think perhaps the damage to the economy won't be that substantial. And secondly, I think they are better prepared to deal with this also. I will be more cautious on the pulp business, even though what Rina mentioned in terms of the needs of packaging and what created new demand for this type of products, which basically is the #1 product that is produced by pulp paper companies or pulp companies in the region, which is hardwood. I would be also a little bit more cautious on that front, because there are still some players that are dealing with over leverage, at least for the ratings categories. Actually, we have Arauco and Suzano, big investment grade names in a negative outlook right now, and they're still facing struggles. Yeah, I'll be a bit more optimistic, I would say, if a second wave of COVID hits our shores.
Thank you, Marcos. Thank you, Diego. Let me go to Marcos then on the same, basically, coming back a bit on how will the corporate sector in general behave in a post-pandemic scenario, in your view. Which sectors have really shown faster recovery potential now? And this is great uncertainty about credit performance of companies when support measures are exhausted, which is what everybody fears now, including with an advent of a possible second wave. Mm-hmm. What's your opinion on all that? And looking at time, maybe if you can pick up also some of your views on the questions on environmental, social, and corporate governance issues, specifically on manufacturing and tourism, which is
sure.
Very,
I mean,
just a mouthful.
Let me try to summarize as I can. But I agree that if a second wave comes, I think the effects, the credit effects more especially, will be milder than the first one. And the reason being, as I mentioned in my initial remarks, companies have done a lot through the pandemic. And for example, cutting costs, raising liquidity, postponing capex. So I think now they are, obviously, I'm speaking generally for all the sectors that and Moody's rated universe here in LATAM, not specifically about tourism or manufacturing, but in general, they are now more prepared to face a second wave of the pandemic, having leaner cost structures, stronger balance sheets, and with more liquidity, right? So obviously that the decrease in demand in general will take a toll and credit metrics. But in terms of liquidity, I think they are better now than what they were either at the end of 2019 or at the beginning of the pandemic. I actually, I have a chart here, if I can share it quickly, showing here some metrics here. I don't know if you can see my screen. So if we look at liquidity, for example, in terms of cash to short-term debt, we were talking about 1.4 times coverage at the end of 2019. Then during the pandemic, companies credit facilities, they reinforced their liquidity, so that now we're expecting that for the end of 2020, they will have 2.4 times cash to short-term debt. So that shows, you know, how and then that's also
I think we're losing Marcos.
Hi, can you hear me? So Azul, for example, raised money in the local market last week. Gold came up with you know, different ways of raising liquidity by selling advanced tickets to their frequent flyer program. So they have been doing quite a lot, let's say, in those terms that will make them navigate better a second wave than the first one. That's my feeling. And then if you think about what will happen in terms of leverage, there's also some hint here in the chart showing that obviously metrics will get worse in general. We're talking about 4.3 times leverage for 2020, and that compares to 3.5 by the end of 2019. But then in 21, once, let's say, companies that now have a leaner structure, as I mentioned, they start paying back those loans and using that excess liquidity to pay down debt, then they will get closer to 3.8 times by the end of 21. That historically, if we think and if we see on the chart that I'm showing on the screen, that's not bad, given the COVID-19 situation that we are living, right? So that's my 2 cents on that one. And then regarding obviously ESG considerations, I think airlines, for example, what they can do in terms of environmental is really keep a more efficient fleet. So with modern aircraft that obviously consume less fuel than older ones. So new generation airplanes, for example, they tend to consume 30% less fuel than older ones. So I think that's good news for the environment. And then on other terms, in terms of social, I don't have examples in the tourism or airlines industry, but if we think about Vale, for example, it got upgraded by Moody's back to investment grade, and the upgrade actually was not a result of better credit metrics or better performance in terms of cash generation or anything. It was really because of what they have done after the accident and with their tails dam in Brumadinho. And we concluded that what they have done so far to prevent such accidents to happen in the future, and even the help so far that they have extended to the population there, and then talking about the social part of the ESG, was let's say enough to grant them again the investment grade rating. Okay, so yeah, I'll stop here and let the others talk a little bit.
Yeah, well, thank you, Marcos. That is excellent. Hello. Yeah, thank you, Marcos. Again, that was excellent. Let me. Can you hear me there?
Yes.
Okay. So let me maybe go to all of you. I'm looking at time and thinking that I'm just going to throw one question to all of you, and perhaps start with Lucas on this. And it's well, with the context that you are all painting, it's clear that cash flow will probably be negative next year for most companies in several of these industries. Is this opening opportunities for M&As? In what sectors? And so where do you see opportunities for growth? And I say, let's start with Lucas, because we look at the oil and gas. So perhaps you could also talk about this tensions between unconventional and conventional there. And when we come to Rina, if you can say something, follow up on your remarks, Rina, with regards to the impact of the energy transition on the petrochemical industry particularly. Okay, Lucas, why don't we start with you? And if you, I should have to ask you to be very brief.
Yes, I'll try to be brief on those two topics, M&A and opportunities for unconventional and conventional. So on the M&A, side for oil and gas in Latin America, the industry has been ready for a lot of activity in M&A. There has been a lot of intention of doing some transactions, but there never seems to be the bid and the ask price never seem to match. We've seen transactions when companies want to acquire others, because there is a lot of small players that will gain from the economies of scale of becoming a little bit larger. So we have, in Colombia alone, we have about 4 or 5 small players participating in the same areas. We have Parex, Frontera, Geopark, and others that operate pretty much in the same part of the country. I mean, Frontera, Geopark, and Parex share one field, one very prolific field in Colombia, but it's just they never seem to meet. Now in 2020 and 2021, I think it's going to be more challenging for M&A activity, as I mean the prices are very depressed and likely investors are not willing to sell their assets. Second, I think companies as they're preserving liquidity, I think they're prioritizing maybe the projects they have in hand over going after M&A transactions. So likely we won't see much activity there. With regards to the opportunities, we believe that most opportunities in Latin America will continue to be, for the time being, concentrated in conventional and conventional oil, and they're going to be coming from the bidding rounds that take place in different countries, as well as potential divestitures of non-strategic assets from large and national oil companies. So maybe Ecopetrol divesting some assets that are more mature, smaller for the size of the company. Petrobras divesting non-core assets in the country as well. That's where we'll see conventional opportunities. On the unconventional in the region, we think that still in the infancy stage, still beginning. The only place perhaps in the region where it's more advanced is Argentina. And still there, even though it's gained, the economics of unconventional Argentina have improved significantly over the past few years. There's still needs for significant investments in the country, especially, for example, in transportation. You need to do severe investment in transportation to evacuate the production from unconventionals and make it even more competitive. Colombia, maybe we'll see in the foreseeable future, in the next few years, we'll see some beginning of some tests for unconventionals, but it's nowhere near seeing significant production from unconventional in the region. So that's what I will say about those two topics. M&A continue to be incipient opportunities, mostly conventional. Unconventional is still on the infancy stage in the region.
Thank you, Lucas. Rina?
Me unmute here. Thank you. So I go back to my original statement that energy transition this year, 2020, is incredibly on the top on the agenda of every oil company right now. So we went from having these issues in the back burner to the front burner. And this is what we talk about. And very few, actually this week, Shell announced shutting down a refinery. So what we think is going to happen is the integration of petrochemicals into refineries, whereby refineries will produce less gasoline and look at options to produce more petrochemicals. On average, a refinery would have an integration with petrochemicals around 8 to 12%. So this is moving up already. It's not like it's going to happen. It's already moved to 20%, and we expect it to move even farther to 30% in the next few years. How do you translate that into Latin America? If you start from Mexico, I'll do it quickly. In Mexico, as you can, there's very little investment in refineries. They're running at very low rate. And there is an opportunity in Cangrejera to take that reformer and convert it into something that produces more aromatics. So that's the only little development. Ecopetrol in Colombia is already looking at restructuring their strategy for the future and looking at this as a possible scenario. In Brazil, Petrobras has bigger fish to fry, I would say, because 4 of their refineries are up for sale. So let's get that done first. So Mubadala from Middle East might end up buying one of, so we may see new players outside of the region in Brazil, not only in Petrobras, but as you know, for many years, Braskem, it's owned by Odebrecht and Petrobras, they're up for sale too. So we expect a reshuffling of players in Brazil, which I think it's positive. Then you move on to Argentina. Great opportunity in Argentina where we see YPF, PAE, and others looking actively at how to move away from producing more gasoline into producing other products that they need and they import. So replacing what China's been doing for the last 20 years, replacing imports by locally produced products. With that, I close because it's a very, but I wish everybody the best for 2021, and we are happy to continue to share our insights with you guys.
Thank you, Rina. That sounds very exciting. Let's move then very quickly to first Diego and then Marcos as we try to close this part. Diego?
All right. Yeah, thank you. I agree with, I'll be very brief. I agree with Rina, downstream in Brazil, potentially concentrated in M&A. Real estate, commercial real estate and office space everywhere. We've seen some movements in Argentina, for instance, and other sectors and other countries. Transportation assets and everything that goes with logistics. I think there may be opportunities either companies buying, acquiring assets with very low prices, or these entities in these sectors selling assets to basically balance the capital structure. Flat steel, who knows, maybe there may be some opportunities out there, especially Brazilian steel makers divesting. And finally, protein, it's a usual suspect of being companies being acquiring, and given that the potential, the good performance of these entities, I presumably will think of a very active 21.
Thank you, Diego. Marcos?
Yeah, no, very briefly on airlines. Azul and LATAM already in a code-share agreement that could at some point probably result in a larger scale deal. And another sector that I cover, which is telecom, there will be a significant activity probably still this year with the sale of Oi's assets to the other 3 players here, TIM, Vivo, and Claro. And also in 21, maybe that there could happen something with Telefónica's assets that we all know are for sale in LATAM. So that's what I have.
Okay. Well, thank you, Marcos. We're checking if we have questions that we may not have covered that may have come from participants. But in the meantime, let me just come back to you for 1 second, Marcos, and ask you about liquidity as a major concern in this year with the pandemic and so on. From now on, what would be more relevant in your credit analysis? Revenues, leverage? What are you seeing?
Yeah, liquidity, as I mentioned, at least in my view, is not really an issue because of the coverage that companies have right now of all the liquidity that they raise. So going forward, really, what we will be looking at is how they recover their profitability, how they recover their revenue, so that the metrics that I showed in my chart can be achieved by the end of 21.
Okay. Well, there's one question here, and perhaps, well, Lucas, Diego, could you pick it up? It's about how uncertainty and fear is being on this year's in everyone's agenda this year. What do you think are the key main levers that corporations should think of to move away from fear agenda to a resilient agenda in the years to come in Latin America? Who wants to pick this up?
So I will say in times of crisis, liquidity is cash is king. Companies have to make sure they preserve their liquidity, they maintain their lines of credits open and available, their access to capital markets available. So that's where we expect companies to focus while going through a crisis. And as I mentioned in my opening remarks, we saw a little bit of that in the oil and gas industries. Companies quickly accessing the debt capital markets, not only in oil and gas, in other markets as well, to boost up liquidity, make sure that they have enough reserves, enough dry powder to plow through the difficult times. So as things start to normalize, then companies, we expect them to navigate with caution, still maintaining their liquidity, and then moving again to strengthening their capital structure. One thing we pay attention when we go through these situations is how permanent does the downturn affect the company's capital structure? Is it a temporary implication, or is the business and the cash flow generation permanently affected? And if that is the case, if they're permanently affected, and the company is aiming to maintain its credit quality at the same level, then they'll need to do some adjustments to their capital structure. So what we will expect is being more cautious in dividend payments and capex, and instead focusing a little bit to strengthen capital structure if the business has been permanently affected. So we're not to see changes in credit quality.
One final note on that: when the pandemic started, I asked our team in the U.S. to calculate the default rate for our region, to estimate that based on the GDP trajectories that our economists were predicting. They say 30% of the portfolio of companies are going to fall this year. We said nowhere near. That was what happened in the past when it was a shock to our region. We came out internally with a 10% estimation, and it turned out that it hasn't reached 4%. Wow. That means the countries are better prepared. They all have flexible exchange rate regimes. The companies do not have currency mismatch. That's way important, obviously with some exceptions. Some domestic markets aren't really well developed, and that's an issue. But that's been different, especially in Brazil and in Chile. And two more things. I think the financial system everywhere has been very supportive, and also the government measures. All of that combined made this crisis far less damaging than it could have been if we had this 10 years ago or 15 years ago.
Well, that's an excellent point to bring us to close. Unfortunately, we don't have more time now, but I'd like to thank you all, Rina, Diego, Marcos, Lucas, for sharing with us incredibly valuable insights that really only you from your position have on the whole region. And we look forward to seeing you in other Latin trade events in the future.